Hi everyone, I'm Aditi, your host for today's episode of Here and Now. Welcome to our 162nd episode where we bring you all the know-how of the ever-evolving insurance world. So let's deep dive into the latest news and significant updates from the insurance industry. The first story of the day from The Hindu sheds light on the issuance of an exposure draft on Bima Sugam by IRDAI. The electronic insurance marketplace Bima Sugam has been mooted as one-step solution to facilitate a range of services related to insurance policies from purchase, sale, servicing, and settlement of claims to grievance redressal. A not-so-profit company is to be established for the insurance electronic marketplace. The revenue model will be self-sustainable and customers will not be charged for availing the services of the e-marketplace, the IRDAI said in their exposure draft. The Bima Sugam platform shall be one-stop solution for all the insurance stakeholders, namely customers, insurers, intermediaries or insurance intermediaries and insurance agents to promote transparency, efficiency and collaboration across the entire insurance value chain and technical innovation in the insurance sector. This will also help in enhancing the availability, accessibility, and affordability of insurance and will provide last-mile connectivity, which will subsequently help to increase the penetration of insurance in India. The next story from the Indian Express and Business Standard highlights the call from IRDAI's chief, Mr. Debashish Panda, urging insurance players to embrace underwriting disruptions as he addressed the 23rd Global Conference of Actuaries. He stated that the underwriting disruptions would enhance market penetration and make the vision of insurance for all a reality by 2047. Mr. Panda also emphasized that the approach of one size fits all has become a thing of the past due to radical technology-driven changes in the industry, and now is the time to retrieve base, firm up resolve, and collectively underwrite disruptions. He added that today customers do not shy away from sharing personal information for a better personalized experience, and therefore, insurance companies should predict customers' needs based on a market intelligence and offer the right product using the right channel to the right customers. In continuation, the next story from the Economic Times highlights the news on risk-based capital or RBC framework implementation by IRDAI, as discussed by IRDAI's chairman, Mr. Debashish Panda, as he addressed the 23rd Global Conference of Actuaries. The insurance regulator will be mandating insurance companies to comply with the RBC framework as it would help in better utilization of capital. The sector will gradually move away from the existing solvency-based model to RBC framework. The current solvency-based model focuses on assessing and predicting risks for insurance companies. It calculates risk capital for each risk, uses methods like correlation, and compares it with actual capital. If actual capital exceeds the requirement, the insurer is solvent. Otherwise, it's considered insolvent. Whereas the RBC framework would serve as a pivotal mechanism that would enable insurers to maintain an appropriate level of capital commensurate with the risk inherent in their insurance and reinsurgence operations. Thus, it would act as a catalyst for insurers to optimize capital utilization and ensure efficient risk management. The next story from the Financial Express delves into how to cover your car under new age policies like Pay As You Drive or PAYD and Bharat Series or BS Plate. Motor insurance is undergoing a transformation, fueled by an improved customer understanding and technological advancements. From innovative products like Pay As You Consume and EV insurance to add-ons and BH Series, motor insurance landscape is evolving. This shift signifies a move towards a customized approach, departing from the traditional standard approach. Traditional insurance models followed fixed premiums regardless of vehicle usage. However, Pay As You Drive introduces an approach with usage-based premiums, which means lower usage results in lower premiums. Additionally, Pay As You Drive provides a cost-effective solution for infrequent vehicle users. Pay As You Drive models vary amongst insurers. Some plans let you set your yearly driving limit, and the premium depends on your chosen limit. Others allow you to switch off your policy for non-driving days with a separate premium for each. Once you pay, you'll get your insurance documents online. Moving on, The news from Mint delves into GoDigit getting a go-ahead from IRDAI for their initial public offering. GoDigit General Insurance offers motor, health, travel, and property insurance, among other non-life products. The approval from IRDAI clears one key hurdle for the Fairfax-backed company on the road to a 1,250 crores IPO. The company is now waiting for approval from the Securities and Exchange Board of India, or SEBI, for the IPO. According to the sources, Digit is likely to be valued at around $3 billion when it hits the public markets. Digit's IPO comprises a fresh issue of shares worth Rs 1,250 crore and an offer for sale for 109.45 million shares. Wrapping up, the story from UNI India is about the Maharashtra government appointing a committee to improve the implementation of crop insurance scheme. The decision aims to overcome obstacles in implementing the scheme and find better alternatives to benefit farmers. Maharashtra Agriculture Minister highlighted the substantial provision made by government for crop insurance this year, resulting in the highest benefit for farmers since 2016. He directed the committee to identify flaws in the current scheme's implementation or recommend alternative methods adopted by each state for direct benefit to farmers. And with that, we wrap up today's episode. We hope you found these stories informative and insightful. Our podcast, Here and Now, will continue to bring you more such insurance updates. Until next time, take care, goodbye, have a great week ahead.